Okay, so the format of our panel session. Can I just ask David and Anish to introduce themselves?
My name is Anish Mohammed. I've been a researcher in this space for a while. I've worked for guys like Microsoft Research and other crypto groups. These days, I'm on the advisory board for a couple of Bitcoin-related so-called crypto payment systems.
I'm David Nordell. I wear two hats. One of them is as a consultant on cyber at the level of policy and strategy rather than technology. The other, more importantly, I'm a FinTech entrepreneur. We're in the field of AML KYC, not doing the same as miiCard. And I don't intend to have a fight with Magnus on the stage, so don't look for excitements here.
Okay, excellent. So can we take a first question for the panel?
What sort of new trends and themes do you think will emerge over the next 2 to 3 years in this whole compliance, identity and security space?
First of all, regulation is going to become tougher. It's already becoming tougher. If we talk about the field of security and identity and anti-money laundering and so on, there's going to be a new money laundering directive published by the EU next year, which is probably going to be much more of the same stuff that's in the third money laundering directive. John in the audience probably knows a bit more about it than I do because he actually sits in on all sorts of stuff in Brussels. But basically what's happening is that some of the areas that are not properly regulated at the moment, especially mobile financial services, will be regulated more effectively. And that means there's going to be tougher regulation on all of the prepaid cards, mobile payments, and so on and so forth. How exactly it's going to look, difficult to say. Also, I think there's going to be a lot more tougher enforcement actions from the regulators, not just in the UK but elsewhere. The tendency has been to really jump down the throats of financial institutions that are not doing their job properly. HSBC got severely shafted over the money laundering scandal in Mexico, $1.9 billion fine. In a different area of financial bad behavior, JP Morgan has a consent decree with the Office for the Control of the Currency in the USA for $13 billion. I don't think that it should have happened at all. They didn't deserve it. It was the result of government policy that JP Morgan basically acquiesced in. Unfortunately, the financial institutions don't have the self-confidence, or maybe you could say the bottle, to fight back against the governments in most cases and actually sue the regulator and say, no, you can't do this. This is the result of government policy, or this is the result of your own negligence. We are going to fight back and stuff it. I think that we're going to see a lot more fighting going on in this field, because eventually the banks are going to lose patience and say, no, we cannot carry on paying good shareholder pounds, dollars, or whatever for the sake of the egos of the regulators and the prosecutors in New York State, which is actually what's been happening a lot of the time. I say this from my point of view. I'm not a regulator, I'm not a lawyer, but I've been following this field for a long time. I think that the financial institutions are being treated very badly, and they haven't learned how to fight back.
Only one observation for me, and it's nothing to do with regulation at all. It's almost a consequence. It's just a trend I've seen that slightly worries me in the last couple of months almost. In response to the large institutions being fined heavily, they're taking decisions not to act in certain areas of business. They're not going to act in terms of money remittance to certain third jurisdictions. They will think the compliance burden is too heavy to deal with smaller volume remittance clients, and so effectively are terminating relationships, which puts those businesses that rely on access to banks at threat. They can't access the networks they need. There are two consequences. One is some perfectly good businesses have to throw themselves into the arms of other businesses that haven't been selected against. But that's very unfair, and we've got clients who are immediately suffering from that. But it also means that you might have some money networks that are not adopted by the banks, who are best placed to manage risks, So in fact, people move to non-regulated or darker systems of moving money around the world because they can't get access to the larger banks who are raising the threshold. So that there's a knock-on effect on businesses who can't get access to the banking services they need, and potentially also consumers pushed to the fringes where in fact their risks increase.
I'd just like to add one little supplement, for which I thank Jonathan for reminding me. What's happening actually is that the Treasury is trying to take a position on this because it feels that it's not in the public interest for the consumers of remittance services to be discriminated against, and they're actually looking for ways to have some sort of lighter weight regulation regime for the remittance industry to make it actually compliant, even though it probably won't be completely compliant with the European regulations, simply so that the remittance customers are not going to be hurt, and that the companies that provide the remittance services are also not going to be hurt.
I guess I mentioned a few earlier, a few other observations. I think it's going to get a lot worse before it gets better. I think the number and scale of the attacks is going to increase. It's an attacker's environment at the moment, and the defenders need to catch up, and there needs to be a lot more innovation and investment in adequate defences from a cybersecurity point of view. I think the other things we'll see a couple more major incidents that get in the public eye. So if you suddenly can't get your money out of the bank for a day, that would probably be quite significant. Or if the internet stops working in the UK for a couple of hours, that would probably be quite interesting. I hope something quite that severe doesn't happen, but I think there'll be more incidents of that type. I think another interesting area will be if there's more conventional conflicts. Cybersecurity is going to be a much bigger part of any future conflict, and certainly if there's any military action anywhere in the world going forward, there's going to be a cyber element to that, and that will play out over the coming years.
Just to add on to what the previous speakers had said, a couple of small observations. I'm sure most of you have already noticed the cryptocurrencies that are around, the Bitcoin and other equivalents of that, have actually increased uptake, and I think the uptake would increase a bit more. Secondly, post-PRISM, a lot of people have, I'm sure everybody in the audience have heard about PRISM, the NSA's ability to actually get all your data from everywhere you have. There is an increased awareness to privacy. I don't know if that will actually translate to anything. And thirdly, the thing I would say is like anyone who actually has a half ability to do something now has the ability to attack a very powerful adversary. So the adversarial model until now was you need to have a certain amount of resources at your disposal to attack like a nation state. Now it's almost reached a stage where a single person in somewhere could actually get hold of resources and actually have a very effective attack on a nation state.
I guess just building on that, the way in which data is shared more suddenly at scale across the internet is affecting everybody's industries here in the way that we try to either legislate or act against and protect. Certainly from miiCard's perspective, we just see the growing separation between trust and the value of that and your personal data. And that runs through regulation, obviously, and cyber attack, but also into how we think about privacy as individuals and what that means. I think that's developing, but I think that will change because the value of that data that you have as a consumer that we think of as being private is already shared for us to get any services at all. And so the position we take up with privacy and the position we take with trust and control of the identity as I described it, I think changes fundamentally.
Okay, can we take another question?
Hi there. It all sounds rather bleak when we talk about trends. A lot of the kind of doom and gloom comes out. So I was wondering if you see, any kind of opportunities. I mean, obviously things like DigitalShadows, I can see there's an opportunity there. But for let's say a bank or a consumer, what do you think are the opportunities of more data, more sharing, etc.?
No, I think those opportunities are fantastic. I think the data sharing allows us to get services online so that people can understand things about me to be able to deliver those services correctly. I think the value from the trust perspective, the opportunity is there for businesses to be able to offer higher value services, for consumers to be able to get the things they want to get online beyond a low value transaction. and deliver things more effectively, for government to deliver healthcare more efficiently, to deliver government services, education, contracts, everything that we want to do in a valuable way online rather than just having to do it at a low level, which we do at the moment.
Just to add to that, I don't think it is that bleak. I think the world's a great happy place. No, but I think it will get better ultimately, and there's huge opportunity for entrepreneurs at this point. I think services like miiCard and DigitalShadows and others coming up can make a big difference. Once we solve some of these problems, everything gets a bit easier. And I fully think you've got to engage and use all these new technologies and really make the most of them. I think they're hugely positive, and we really support that.
I was going to try explain something with at least two panelists I involved with, the so-called the concept of big data. So essentially, you're getting hold of large amounts of data and getting insights out of it. And at least definitely DigitalShadows more or less does it. And I'm assuming at some point of time, miiCard will have to do it. So there are good, you already see two examples of the good come out of people analyzing data. So I would say that if you look at the good side of things, ignoring NSA and the rest of the guys, there are a lot of benefits of doing that. You can actually look at the genomic data set. You can think about other data sets that's out there and get a lot of good value out of it. There's always a downside of any good thing. Just there's a slight risk, an increased risk. Risk is an opportunity that somebody who is actually not so straight thinks this is an inverted business opportunity. Just like, okay, I can make some money by breaking the law. So that's essentially what it is.
I think that there's a very big opportunity lying in the economic development of what we call the less developed countries, especially in Africa. There's a very big project under planning, I suppose, is probably the best way to describe it, for dealing with the unbanked populations of Africa. We're talking about many millions of people who at best are able to use services like M-Pesa. They're very good, but they don't actually work as well as conventional banking from many points of view. There's also quite a lot of fraud taking place through M-Pesa against the interests of the customers. And a properly regulated banking system in these countries is going to make a lot of difference. Obviously, it's going to be helped by the increased pervasiveness of internet technologies, mainly through mobile. So you're going to see a lot of growth in that market. You're going to see a lot of growth in a few other parts of South and Southeast Asia. There aren't too many other places left for additional economic development. China is already tremendously developed in most respects. What you're going to see, of course, is also a lot of opportunities coming out of e-commerce and m-commerce. And these necessarily are going to have implications for security and regulation and so on and so forth, all the things that we know from the developed world. I think that the other thing that we can possibly look forward to is that after a few more years of continued regulatory mess, and it is mess, to give one example, the issue of sharing data, which is necessary from certain points of view for implementing the money laundering directive. It can't be done properly in Europe because the data protection regulations essentially restrict what can be done. Eventually, the regulators will start to talk to each other properly and work out how to do things well rather than restricting everyone's capability to do business properly. It's going to take a while. I think also in the United States, which is heavily and badly overregulated, they'll eventually learn how to do things better. This, incidentally, is not only true for consumer banking, it's also eventually going to change for investment banking, which is going through the same kind of process of overregulation. But it's going to take a while.
I think if I didn't enjoy my job so much as it was, I would put my boots on and jump into being a payment initiation service provider. I'm happy to help anyone who wants to. I think that's a great space. It's very rare you have something as all-encompassing as the EC effectively setting up an entire regulatory regime, laying out the red carpet to innovation to challenge the existing status quo in a payments model. I think that's very exciting. And I think there'll be lots of other opportunities. There's been a swathe of regulation since 2008, since the sort of Lehman crash. And I think regulation is hard work, it's red tape, And it's only, you might say, after the full cycle of regulation that people start coming up with good ideas about how to make it easier, coming up with solutions, and which some of the guys here are obviously already doing in response to that, and they're at the head of their game and leading the way. I think there's scope for others to follow to make regulation easier.
Okay, we'll take another question.
I think Anish just mentioned something there about the linkage, or when you get on the internet, you can make some money and break the law. There's definitely a perception that I have that you sort of hide behind this wall when you go on the web, and that gives you this protection against the law that you should not necessarily have. And I think maybe for Jonathan, I think the legal profession seems, or maybe the legal structures seem to be a long way behind where the internet world has got to. Is it going to catch up?
I suspect it won't. I think we're conscious we're well behind it. I mean, you've only, being very candid, every time we meet a new client with a new idea, there's actually a little learning curve for us to catch up as quickly as we can with where their idea is going, what it is they're talking about, the acronyms, the kind of concepts they're talking about. We need to catch up. And we at Taylor Wessing, we're a FinTech firm, so we're strong there. The regulator's going to be even further behind. I think it's extremely difficult as a regulator to come up with rules which predict what's going to happen next. What you tend to do is reduce back to higher levels of generalism, of principles, so they're broad enough to cover future developments, but then what you get is actually uncertainty because they're not specific enough to deal with a particular question you've got. So there's a constant tension between trying to be too all-encompassing to accommodate all comers and all eventualities, and then it doesn't do the trick. What you then get is a fragmentation of law as different regulators and industry bodies start coming up with industry guidance, codes for their particular segment of the market. That process happens, but it's then hard to find the answer you need to find because you've got to look for it in 10 different places. So I think that constant, the way in which regulation comes about is not perfect. It will never really catch up.
I think as well from a business perspective, if you wait for regulation, you can find opportunity in it. But if you don't stay ahead of it, then you're ultimately reacting to something that's there in place to stop misbehaviour. So from a miiCard perspective, we try to keep ahead of what regulation does, and we do that based on a set of values, which are loosely aligned with social democracies that we live in. So we put the consumer at the centre of everything. So I guess when we were founded 2 years ago, we used account aggregation. We spent the first year with people saying, you can't do that. And we said, well, we think you probably will be able to soon. But we didn't have any evidence for that. But our values said, if you put the consumer in charge or the individual in charge of their identity and what they want to do with it, then that's the bet we're going to take. Eventually now with the Payment Service Directive 2, that's become the way that the regulation's thinking. But you can't always wait for the regulation to get there. So I think it's impossible for regulation to be ahead of where the market is. And I think it's foolish for business to wait for regulation to catch it up, to then react to it. I think there has to be a balance between the two. And there's huge opportunities within that as well.
I've spent quite a lot of time talking to the regulators and also the Treasury. And Eddie and I were both involved in a meeting a few weeks ago with Treasury, Cabinet Office, BIS, and various other organizations, including the FCA. I've got two observations. One is that the government, including the regulator, is much more open to understanding how the FinTech innovation community, or actually other innovation communities, can lead the changes, and they're actually being very responsive to what we're doing. They listen, they want to learn, they want to understand what they need to do in order to make technologically led change happen, so long as it's not actually against public interest. On the other hand, I have to say that there's a big problem with the regulators in general, especially the FCA. They're understaffed, they're underpaid, they're under-resourced, they don't have enough people who understand certain key issues. They're behind even on anti-money laundering, which is essentially a well-known problem. When it comes to cyber, they don't have the resources. They don't have the people to do the supervision of financial institutions on cybersecurity. The PRA, in other words, the Bank of England, is a little bit further ahead in terms of drafting some regulation, but it's frankly about 2 years too late, even if we take the change of government as a starting point. In reality, cybersecurity, and therefore the security of people's money, are prejudiced by the incapability of the regulators to catch up with reality. And I think this is something we've got to be very concerned about. And it's not because the government hasn't tried to do things, but they're also under-resourced, and there's a bureaucratic way of doing things, especially in the Cabinet Office, that makes things take a lot longer than they should.
I just thought I should add some observations. In general, what you would observe, I'm just going to make this observation throughout history, because I've been looking at this space. I've been a researcher for like 7 years, just doing research, looking at all the attacks from the very protocol level, as in looking at protocols and how it works and what happens next. I think as the ecosystem evolves, the ecosystem will have an amount of resilience that's built in. So if you look at our normal day-to-day life, there's all the kinds of fraud that we actually see in the cyberspace, more or less has been there. But it has reached an equilibrium. So you can't actually, to upset the system is really hard. The system has an amount of resilience. Right now what is happening is we are going towards the equilibrium status. So even though the numbers look really, really large, because the so-called cyber economy is so huge, it's really a very small fraction of it. And once the system actually reaches its maturity, I believe there'll be a lot of systems that ecosystem will evolve, and that will actually help the system maintain its equilibrium. So I'm optimistic that in a couple of years' time, or 10 years' time, or 20 years' time, we will have at least parts of the ecosystem will have an equilibrium. So if you think about card fraud, you can look every time new technology is being introduced, there will be an equilibrium, and then some innovation happens and then it changes. So that will be there, but more or less, if you think about a long cycle, you can see there will be a stable state. That's my optimistic way of the world.
Okay, thank you very much, everyone. Thank you.